I did a thing. I rolled plug. Let's take a look. Hey everybody, this is Spooky's Revenge. We're back with another episode of the $500 5-year Rags to Riches series episodes. I'm just going to put it on the screen so we can see it. Let me just get my face out of the way. We'll just jump right in because I don't want this to be a super long one. It is Friday and you guys all have lives. So. All right, so as you can see here, we've had some drawdown on Neo, of course, and we also had some fall off on Plug, which is awesome because I'm selling a 2-day contract. So I want the contract to expire worthless. And that's what we did. So on, I think it was Wednesday, I sold these $6 contracts with a 350 strike price on Plug, Plug. And I just closed it out at 1 cent per contract. So not a huge profit. It's $15 overall. 3 contracts, $5 a contract, over and over and over, though. That does add up. So I noticed it was like 90%. So I was like, well, why don't I just close it? And then that way I don't have to wait all weekend and then have Monday hit before I open them because they're not going to be out of my portfolio before the market closes. So that's all I did. I just closed it early, locked in that $15 profit. And then I immediately opened up another set of covered calls, same strike, different expiration, but I got $12 per contract on these. So what that means is that I will have, by next Thursday, another $36 in this position. So if 328 rolls around, I will say realized 0.12 down to 0.00. So next Friday, I won't have these in my portfolio. I might still have the shares, but I won't have the covered call. Times 3 equals plus 36. And what that means is that I would have then had a total of $51 off of these 300 shares that I didn't have to do anything for other than to hold them. Okay, so overall, right, I bought these at 328. You can see it's not reflected in the share P&L because it's converted to cash when you sell the contracts and realize the profit. But I sold them at 328, and then I collected 5 cents per share per contract. 100 shares every contract and 3 contracts. That brought my average down to, or my cost basis for each share down to 323. So that's 5 cents. Okay, and then we can ignore that. We can ignore that, we can ignore that, we can ignore that, we can ignore that. And this one, instead of going down to 318, which would be another 5 cents, I ended up selling 2.5 times that. So this comes all the way down to 311 now. Okay, so if the price stays above 311 until Thursday or Friday of next week, then that will be a net profit. Oops, I just moved that by accident. All right, so hopefully this makes sense, right? So this gap right here between my cost basis line, my average on my, that's actually reflected in the shares, is $3.28. And this gap right here is the value. It's the offset that I saved by selling that first contract. And this is an offset from selling the second set of contracts. So I moved my average from 328 down to 311. So I've saved myself 17 cents just by selling calls against shares that I already owned. And that's insane because it's, 2 days on one contract, 6 days on another contract. So next Friday, I'll get to do the same thing again. The contracts will expire on the 28th, so at market close. Following into the next morning, they'll disappear from my portfolio, and I will realize 100% of the the $12 times 3 in profit, which again, it's a $50,000 account, so it doesn't matter much, but I've only committed, $900 basically. So what's 328 times 300, right? I've committed $984 to this position, and I will be receiving $51 in profit. So I'm already sitting at about 5% after a week and a half. So it scales pretty nicely. So this part down here is not realized yet, but it will be next Friday, for better or for worse, right? Because the price could also just blast, and then I get assigned, and then I still sell the shares from 328 up to 350. So that's another 24 cents per share, which would be, 22 cents per share. So that would be this number in addition to these two numbers. So it's going to be pretty nice. That's just one, right? We've got 5 positions open right now. So obviously Neo has taken a little bit of a hit, which is okay, right? Because we kind of expect it to keep selling off. We want that mild bearish movement, and that's what allows us to keep the shares and also keep selling these covered calls. So these shares I bought at 535, and then I sold. I locked in a 34% profit. I believe that's 34 cents, which brought it down to 470. And then when that's done, when this next set of contracts is done, that's another 30 cents. Or I'm sorry, I'm talking too fast. I bought the shares at 535, locked in 34 cents profit. That brought the cost basis down to $5 and maybe 501. And then I just opened these earlier at $30 each, which brings my cost basis down to 470, 471. So I moved my average from here all the way down to here, and it's below the price, which means that I will have a net profit if I close this at any point, as long as price stays above here. That's why it's my biggest position. It's my most confident one. So this one obviously has potential to blast, and you can see if we look at OCGN, this one's kind of it's a little bit of a brain meld. So you can see that the shares are up 71%, and it's worth, as far as the shares go, $6,500. Okay, but, and here's the kicker, right? 5,000 of that is being deducted, unrealized, of course, because of the calls that we sold against them. So that's what the calls are worth, the increase in price, which means I have to take that profit, that differential, out of my share appreciation profit until the contract goes away. Once it goes away, right, I'll either be assigned or I won't be. Either way, I don't care, right, because this big red number will go away. I'm either going to be assigned or the contract will expire worthless, at which point I'm still, if I get assigned, I'm still obligated to sell these at $1 per share, which is fine, right? That's just that original $27.71. However, I don't see the price coming back to below $1 after a run like this on OCGN unless something crazy happens. Or, maybe it's just a whole bunch of manipulation, which means I still get the profit here once these contracts expire worthless. And if the share price stays above $1, that's extra profit anyway. So I'm not going to fight the current, and I'm not going to get in my own way here and lock this position because I'm already sitting on potentially $6,000 worth of stuff. I just have to wait till this contract goes away. And who knows where OCGN is going to go before then. If the price comes back down here, the contracts will deflate, and then I can just buy them back. If the price goes up higher, the contracts will eventually expire worthless, and I'll either get assigned or I'll keep them. At which point I will just have 10,000 shares at a super inflated price compared to where I bought them, and I can just make extra profit on top of that, or I can just run another set of covered calls. Since I have 10,000, I can also do like half and half. I don't have to do the full position here, but just to show you, even though the price has pushed and I'm 73% up on the shares, it's still less profitable for me to close this right now than it would be if I just got assigned like a normal person. That's why I'm not selling it. WBA, same thing. It's just kind of stuck sideways. I don't really, there's nothing going on here. It's just going kind of flat. Now it's lower than where I bought them. I bought them at 21.26, but I was paid 92 cents per share basically to do that. So my cost basis is really down here at 20.34. And this contract also expires next week. So if this gets down below like 80 or 90% profit, I'll lock it in. I'll open up another set of covered calls, and that will reduce my cost basis down even lower, below $20. So easy peasy. You can see how quickly this can drive the cost basis down into the dirt. You just have to keep track of it because it's not reflected in your share average. So just keep that in mind. And then plug, it's the same thing. It's just kind of mild sideways. Nothing really major going on with it. It pushed and then it's pulling back. And I just opened these calls at $12 per contract, and they're already what I paid for them instead of being at a deficit, which is pretty cool because it's Friday. It's end of day Friday. So Theta is going to work for me over the weekend. It's going to put in some work on Monday. It's going to put in a little more work on Tuesday, even more work on Thursday, and all the work on, Wednesday, and then all the work on Thursday. This will expire worthless, and then if price is below 350, I won't get assigned, and I'll just run another one. So it's a nice little process, and you can make your shares nice and cheap this way. Obviously, getting into an underwater call is a little bit of a different story, but you just have to be a little more careful about assignment. Here's SPCE as well. The price has literally not moved much. I got it at 141. Shares are currently at 137. It's moved down 4 cents, which is that's like 2.5% on the share side. And the contracts are 41% up, and they also expire next Thursday. So you can see how efficient these short-term contracts are. The price moved down 4 cents, and these contracts are up 10 times that amount percentage-wise. So it's pretty insane. So yeah, that's that. I don't want to go too far down the rabbit hole with those. I just want to demonstrate that these covered calls work, and if you do the shorter expiration ones, and you can roll them effectively, like if you're able to focus and kind of, if you don't mind managing them, you can make some pretty easy profits, and it's more efficient, even though the premiums are smaller. You know, the kind of the key takeaway is I can sell for a big premium right now in hopes that I get assigned and it moves itself out of my portfolio faster, or I can sell a bunch of short-term ones and eventually get assigned. And it's just kind of figuring out whether or not that's likely to outperform the big premium if you bought it. Because I could sell a contract right now for a year from now, right? If I just look at this one, 300 days out, I could sell these at $50 and not think twice of it. But why would I, right? It ties up my capital. There's no guarantee that I'm going to get assigned, where I can make $50 easily by selling $5 a week, 10 weeks. Same price, right? Or same profit, I should say. Okay, so here is the Rag Searches account. I kind of want to do an end of week recap really quickly though, because this video is already 11 minutes and I didn't want to make it too long. So Johnson & Johnson, pulling down a little bit. That's okay though. It's kind of just par for the course. This is a long-term investment, and we're still just kind of in this range, so not worried about it. Tesla bounced pretty nicely off this level here. Obviously, Tesla itself has some interesting goings on right now, so we're just kind of waiting and seeing where that goes, and the EV sector as a whole. JEPQ just rocking and rolling. SCHD also just rocking and rolling. Clip actually bounced up pretty nicely from the recent low back in late January. Pretty happy with that. O is just kind of flat right now. It's not going up, not going down, but that dividend has been increased every month for 30 years in a row. So I'm going to keep hanging on to that. Ladder's pulling back a little bit, but this is again is a long-term investment stuff. They have a quarterly dividend. Last one was paid out in December, so we should have one towards the end of this month. So not too worried about it. It's not much. It's like 92 or 93 cents or something. Main also in the same vein as JEPQ and SCHD. They're just kind of pushing. Right, this is kind of what we look for in stocks. I obviously have an OCGN position here, and the percentages are relatively similar in this, in the sense that, you know, the share appreciation is 60 to 70% up. The regular position, the cover option, is about 30%, and the calls themselves are 150 to 200% up for the buyer, which is down for us. So pretty easy. And if we think about it, I don't want to ramble too much, but a buyer, right, who bought this at $25 sold it already. People get very greedy. They don't want to hold it for very long. And the person that's currently holding it probably paid a lot more than $25 for it, which is why I'm not getting assigned, because it has to be profitable for them. And they're more likely just to hang on to that massive surge in premium and try to scalp that rather than try to get assigned and then sell the shares. So I'm not too worried about assignment, but it may happen. Might not. I have until April 19th to care about it. So Neoleap is down pretty far, but again, I plan to build this one down, sell it sometime mid to late summer. FRSX, this is a trade that we took this morning, and it tapped my sell order, but it didn't get filled, and it's just been going sideways all day, literally all day. I got this at like, I think it was like right here or something, like 10 o'clock or 10:30 or something. It's just going sideways. And SFES, I kind of went over this on the stream this morning. I'm still going to get paid. It's still going to be $1.65 per share, but I have to wait for them to take the shares out of my portfolio and pay me. So it's locked in. It just might take a couple of months for that to happen. So I know a couple of people have been asking me about it. I don't have any update. I just have to wait for them to just do it, unfortunately. So hopefully that is enough of a recap. The live stream this morning went really well. We got some great discussion. We had a couple of the long-term members. They were on the mic, so that was a pretty good turnout, and I had a good time. But I gotta go for now. The main purpose of this episode was to demonstrate the power of plug. More importantly, the power of closing something just before it expires to get an extra day's worth of theta. So, well, in this case, the extra 3 days, because the Saturday and Sunday also count. So with that said, I'm going to jump off of here. I appreciate y'all watching, and I know this episode is a little longer, but I hope you guys have a good weekend, and hopefully this was comprehensive enough to resonate with you guys. So I will catch you later. Thank you all for watching. Have a good weekend, and be safe.